Good morning, everyone. Troy Eckard with Eckard Enterprises out of Allen, Texas. This morning I'm going to give you a market update on the oil and gas sector. It's December 15, 2021. We're about 16 days away from closing out the year, but what I wanted to do is talk about why we're seeing such a softening in the prices of crude oil. And of course, natural gas has given back a little bit of their high-rise prices that we saw over the last few months. So first off, for me, this is not really about what I would call supply-demand. This is more about trading the market based on variables such as the Omicron variant and subjective opinions about what the economy is going to do as far as pulling back. The fundamentals haven't changed. We're still consuming more oil and gas than we were before COVID. Demand is still rising very sharply. Rig count is running around 500 active rigs in the United States, but really what it boils down to is we see much better performance well by well, meaning the wells that are being completed and drilled are doing much better than they were 2 or 3 years ago. So the lower rig count number is still providing a really nice recovery when it comes to supply, but I still see a major differential. I still see that we are going to be very, very low on supply side relative to increasing demand. Now, I had felt like we'd see prices around $80 to $85 a barrel by the end of 2021. I still think we can see a $5 to $8 increase in the price of crude oil as traders try to fill those contracts by the end of the month. The middle of the month seems to be somewhat soft when it comes to trading commodities. Natural gas is basically just taking an effect when you look at the weather. We've had a very, very hot, very warm winter across the country. We're starting to see some of those initial cold fronts coming across. We're still running around $3.90 per thousand cubic feet today in gas. But let me tell you, if you believe in the Farmer's Almanac, if you look at the weather patterns, you look at La Nina, you look at El Nino, what you're going to see is a probably drier, slower start to winter, from what I can tell from the weather reports and looking at the data. But you're also looking at what could be a very long, bitter, cold, early spring, meaning from about February through about maybe April, and that means we see a high consumption rate of gas and crude oil and petroleum products. So for me, I'm looking at still closing around $77 to $80 per barrel for crude oil. I think we'll see a $7 rise over the next 2 weeks. I do believe traders are going to be scrambling to get those barrels locked down. I do believe natural gas will end up over $4 per MCF by December 31st, but there still is a very, very strong likelihood natural gas prices could end up at $6 to $8 per thousand cubic feet by March or April. Why is that? Because it's a point of sale, supply and demand kind of a product. With that much LNG being exported, we're going to see natural gas prices have a lot of pressure on demand in February, March, and April, and that's going to push gas prices up by roughly $1.50 to $2 per MCF, could be even higher. Now look, this is all weather driven, this is all supply demand, this is also gyrations about the COVID variants, Omicron, Delta, etc. But at the end of the day, scrape off all the nonsense, you get down to the fundamentals, it's always the same thing. We keep consuming more fossil fuels, there is less supply. Other countries have already said we can't supply it, don't have it, won't get to it. We're still looking at a sharp rise in crude oil prices over the next 12 to 24 months. I'm very confident of that. I still see prices over $100 a barrel in the next 12 to 18 months, and I still see natural gas strong, well over $4 per thousand cubic feet on average in 2022. Hey, listen, I'm Troy Eckard. I'm the CEO of Eckard Enterprises out of Allen, Texas. Thanks for listening to me. I hope the commentary provides you some insight.